Rates up, high growth tech like the ARC names down. How closely are you paying attention to that?
Well, I'm paying very close attention to it. Look, we had an all-time high recorded for the S&P, but you have to pay attention and acknowledge and understand that something is going on internally in the market today. First of all, the U.S. dollar continues to push higher. Secondarily, a 2 to a 10-year spread continues to contract further. And to your point, a lot of places where speculative capital has been very comfortably residing, that capital seems to be coming out, whether it's crypto assets, whether it's a Cloudflare, a CrowdStrike, a lot of the Cathie Wood names that you're talking about. Scott, even a Shopify is down 6%. So listen, I'm not going to come on air here at 12 o'clock and say I know the exact reasoning why we're seeing this reversal this morning, but it is certainly something that needs to be paid close attention to as we move forward here in the coming days.
So, Liz Young, I mean, you get a big potential risk off the table with Powell being renominated. It's what you know versus maybe what you don't and what you think policies could be a little bit different. But with that, you do have a move higher in rates on rate hike projections, perhaps being moved forward. So how do we play it now?
Well, I think, first of all, Powell being renominated is a positive in the column of a year-end rally, and obviously taking some of that uncertainty off the table. Not that Brainerd would have been a bad decision, and it probably would have been a more dovish decision, but at least we're not going to upset the apple cart before the end of the year. The rate move is higher, but it's not materially higher. And I would remind everybody that we've tried to get above that 174 level on the 10-year twice already this year. It didn't happen. I would not be surprised to see us test it again before the end of the year, but I don't think we're going to move that much higher. I think actually Steve mentioned this in a tweet, and it's been something that I've been watching. The supply and demand issue in the Treasury market is going to keep us kind of in a range in the 10-year for a while. I think we see some yield curve volatility through the end of the year, especially on that December dot plot and the CPI readings that we'll get in December. But after that, when we get into 2022, I do think the curve steepens. I think the Fed wants the curve to steepen, and they're going to do things like accelerate the taper in order for that to happen.